I will not be doing these every week. I'm just too busy for it. I mean, last year I was even doing it on vacation, and I'm like, yeah, I can't do that. So the plan is to have one a month, kind of to talk about what's happening. There will be ways to do small things. I have some master classes coming. Those of you who are friends with me on Facebook might have seen that I posted something about doing a live in-person master class. That is in the works. There's a company that's going to take care of all it because I don't have time to take care of it. That is coming. It'll probably be end of August, first part of September, due to the fact that a lot of people said they would be interested in. There's going to be 2 sessions, so they're going to be small. I'm looking at only 20 people. Now, it could be a husband and wife would count as one, or two people from the same company. So if you're an agent and you've got a new agent you want to bring, you could count as one. But 20 units, I should say, partly because a hotel cost isn't any different for a spouse than it is for by themselves, right? I'm gonna have there's gonna be 4 master classes, and then everybody also is gonna do a one-to-one for an hour with me. So there's only so much time I can do. So these are gonna be small, and they're gonna be very much more of a deep dive in person. So kind of keep an eye out. I don't know what it's gonna cost. Like I said, I have a different company that's handling it all. My guess is around $2,000. That'll include the hotel, couple meals, will not include your airfare. Or I met somebody, I don't know if he's on today, I met somebody in the airport in Chicago on my way to another convention, and he was like, Coach Chris. He was trying to convince me to have it in Chicago so he didn't have to drive very far. But I said, you can drive up. I drive to Chicago all the time. But so those are coming up. As soon as I have the next month, I'll let you know. Still letting lots of people in. We're at 56 so far. So so those of you who have been doing this a while, how was open enrollment for you with some of the new rules and regulations? If anyone who wants to unmute, tell me your story. I mean, I had to call the marketplace for the first time, and I don't know how many years. That was
Me too, and I had to do it like 3 times, and it was miserable. But and I also did actually stumble upon some like fraudulent cases too. So that was not, I mean, interesting from my perspective, unfortunate from the consumer.
right.
But yeah, it was wild. It was wild, more wild than I thought it was going to
Than you
be.
thought we're expecting.
Yeah.
Yeah.
And I'm kind of a little bit excited about some of the things that they're implementing or proposing, because I do think that they'll reduce some of that in a way, I think.
I had somebody say they're excited that they can actually enjoy Christmas. And
Mm-hmm.
yeah, we implemented that last year, because I'm like, I don't care. It's not my fault that you didn't get me your paperwork in time.
Mm-hmm. Yep.
Um, and I will tell you, I was using a workaround, and the workaround, unless they do something, will still work. Everybody's insurance ends December 31st.
Mm-hmm.
So before they made it January 15th, it was my habit whenever I was enrolling somebody to say they were losing coverage January 31st. And then it gave, 2 months. So just don't panic if you you want people to be done by December 15th. You want to have Christmas with your family
Mm-hmm.
and New Year's, right? After
Yeah.
working a stupid amount of hours. But if there's that one person or the last minute, there is a way, because everybody's insurance ends December 31st and a new policy starts January 1st if they're on the marketplace. If they're
That was the best tip you ever gave me. Thank you.
don't panic, but now you can tell people December 15th. Anyone else got any fun stories? It was interesting. I had to call the marketplace more than 3 times, because we have a lot of people, and we were running into issues because of an agency LOA situation. And now, in the state of Wisconsin will not let NPN overrides happen. They just removed it completely. So I'm like, what? And they're doing it because they're like, I kind of get, they're saying, well, the client is enrolling with, my agent Josh it shouldn't say Chris George is the NPN. And we're like, yeah, but they all know this in my agency. My consent form says you're enrolling with Next Step Insurance. Here's the list of agents. All the agents are like, so I'm like, oh, now I have to deal with Wisconsin OCI. So, so I don't know. In Wisconsin, they're just not going to let us do NPN overrides. Now, mine are LOAs, so it's not a big deal as far as commissions and that kind of stuff. And excuse me, I have a really bad cold. So I have a cough drop in my mouth. And so every state's going to do their own thing. I mean, that's the bad part. Now I have to really cough. I have some hot water and lemon or lemon and honey for myself. So it's always a work in progress. The thing that I realized that actually Brandon and I were both at, and I was talking to somebody else, is that one of the things that's missing in the ACA world, and this is with agencies, is that there isn't an agency login for Oscar so that you can see everybody. There isn't an agency login for United Healthcare Individual so that I can just see all of the company, Next Step Insurance's clients. Like, so as assistants, they have to go, okay, who's, Josh's client login and Sam's login and my login. I'm like, this is so frustrating. But on Medicare and on a lot of the ancillaries, there's an agency login. For Allstate, I log in as Next Step Insurance, and we see everybody who's under there. And so there is a new carrier for us called CareSource. I think they're in some other states, Michigan stuff. They just merged with our biggest insurance company in Wisconsin, and they said they have an agency login. So I'm like, oh, okay. So, so maybe I don't need the NPN override if I can have an login. The reason we ever did the agency and the NPN override as LOAs is that because I had an agent leave, and then we were stuck with these clients that were under her portal, and she was not with us anymore, but they weren't her clients. And with the marketplace, as many of you know, the marketplace is what tells the insurance company who's getting paid. They can't just do a mass transfer. Medicare, they can't, right? You sell your book of business, United Healthcare goes, okay, Bob was the client now, or the agent, and they can't with ACA. So these are just some things to, keep in mind if you decide you want to grow an agency and you want to do NPN overrides. Your state they may start copying Wisconsin. And again, it's part of their attempt to fix the fraud from the call centers, because that's what happened. And I think some of the call center bigwigs are getting out of lawsuits by saying, I didn't know, it wasn't me. And we all know full well the call centers were told what to do, but they can say, oh, I didn't know that, Johnny Smith, who in his cubicle, was doing this. Yeah, but your name's on it. Well, okay, your name can't be on it. So just to kind of be aware. So and Aaron's asking, would contracting as an agency fix this, or is it just doesn't exist with some carriers? It doesn't exist for some carriers. Now you should, if you have an LLC, you should be contracting as that LLC yourself. But when you start hiring people, it's under the agent licensing, not under the agency. And that's because I need another thing to put on my plate. But now I'm like, all right, I got to try and, convince these insurance companies, make an agency portal. We know it can be done because it's done in other areas. And that will help because, I have a team that helps my people. It's not just me. I need to have my team be able to help these clients. The other thing that I really want to bring up before we get into too much is some of you saw this because I put it on Facebook, and I'm going to put the link in the chat right now, is we now have 15 days left to respond to CMS regarding the affordability, the ACA changes. Oh, it's trying to put it in the waiting room, not the waiting room. There you go. That is the link that will take you to the place where you can make a comment regarding all of the changes that's happening. We only have 15 days left. Those of us who are going to Medicarians and ACA Summit, I will be there next week on the ACA Summit on Monday. And my group of people that are talking, this is one of the things we're telling everybody. We'll be like, we got 10 days left. Like we need to put in there what is happening. Now, some of the changes are not a big deal. They were very much the same as pre-Biden. I did it a lot. So the December 15th, not a big deal, right? I don't personally agree with them kicking the DACA recipients off. I never understood why they weren't part of it. They're here legally. Why are they carved out? So I wrote something to CMS regarding this. And I'm gonna show you. I am not a wordsmith by any means. I was reading some of the public comments. You can click on it if you want. You can just randomly click and you can see what other people are posting. And some of them, it was, a simple line like to stop doing this is just detrimental. That's not going to change anybody's mind. You have to have somewhat educated responses, maybe some, arguments. So I have OpenAI Copilot for Microsoft. You can use your Chat GPT, use them to help you make a argument, a compelling argument on why. So I wrote, help me write a compelling argument on why DACA recipients should not be carved out of the ACA. They're lawful citizens of the US and should not be excluded from the tax credit that all other lawful citizens receive. So that's the directions that I told my co-pilot to do. So DACA, by the way, for those who don't know, stands for Deferred Action of Childhood Arrival. So DACA it's a big political thing. There are a bunch of children who came here with parents who did not come here legally, but they've lived here their whole life. And I can't remember if it was Obama, I'm pretty sure, they made up a law that they're here legally while they figure out what to do with them, while they're trying to get their citizenship, while they're trying to do that. But they are deemed legal residents of the United States. And they were promised stability and inclusion, and they weren't going to get kicked out and all this stuff. And I did not know this till about 3 years ago, because in my area, I don't have a lot of DACA recipients, but I know there are some areas that do, that they were carved out of the Affordable Care Act. They are not allowed to get tax credits. And I was a little shocked. I'm like, wait a minute. So we made the Affordable Care Act and somebody said, but not this group of people. And they're not illegals. They're here legally, but they're carved out. So in the last, 13 years, there's been a lot of talk, and then they finally were able to get it for this year. That is being reverted back, where DACA recipients will not be able to get it. That just seems wrong to me. And it's not like, we're not talking hundreds of millions of people, okay? In the grand scheme, they are a tiny, tiny, tiny percentage of people. So it's not like it's going to skew the numbers if a bunch of DACA kids show up. So I asked it to do that. So my response is not just, well, that's not fair. DACA recipients shouldn't have this. So I will put in there, this was the response that my AI, I'm going to have to break it up because it's over 2,000 words. I said, I need something that's going to be, and by the way, all these comments that you do, they have to respond to. They cannot not respond. They'll group them. I mean, they're going to put all the DACA comments together, but they have to address each thing that is written in the DACA recipients. So here's my, oops. Sorry, my cut and paste is not working as much as I would like. So that's the first half. And then I wrote a second half. So there's my entire, what I put in for them. It was an argument about why they should have DACA. So please make your comments, read what's happening on on what they're proposing. Whether you agree or disagree on stuff, you can even say, I agree, and why is your reasoning for agreeing for it? Such as bringing back the documentation that shows SEP. I'm 100% for that. Okay. Why are you 100%? That will help reduce blah, 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 fraud, blah, put your arguments on there. Because if we just go in there like, children saying, I don't like it, they're going to just go, yeah, you don't understand. The chances of us changing things is slim. Typically speaking, when they put that out, it's kind of what it's going to be, but they have to justify from what we as agents, as carriers, I know carriers are commenting, they have to justify why they're not changing it. So, Virginia said, is it worth talking about the states that have very few DACA recipient groups accepting ACA plans or doctor groups accepting ACA plans? You could put that on there. I don't know if that is going to go into that specific comment, because what the comments are about, what the changes are. So if you,
Oh, okay. So it really doesn't have, I
yeah,
mean, I'm just in a state that every hospital group still calls it Medicaid coverage. Like, they don't like, they don't like ACA plans, so it's
and
harder
it's
to.
kind of bullshit because they do like ACA plans, because every group insurance is an ACA plan. They just don't like the marketplace because the carriers are trying to go cheap. So
Right.
it's really a carrier issue.
It is.
Anthem Blue Cross can contract with anybody they want with any rate that they want.
Right.
United can contract with anybody. So really, this is an issue, unfortunately, with the carriers and the hospital systems.
Is there an association like I mean, I know it's HAFA, but is there anything that, someone like you or whoever gets in front of these carriers to say, what are you doing? Like this, fix
Your
this.
your insurance office for the state is really who should be doing this. They're the ones who can dictate your state's carriers. You must contract. Doctors, you must contract. Like, they're the state is the one who's going to dictate that.
Okay.
So and it depends on your relationship, you got to have a good relationship with your carriers. My state's just weird because I have great carriers and they cover everybody. So, but the states that you're in, if you're really good, let's just say it's United Healthcare in Florida, find your Florida rep, go, what do I need to do? Like, what is going on? Because I know United Healthcare has contracts with every hospital system. So what is going on with your contract for the individual market? So,
Okay. So you would write your state, like here in Florida, Florida Blue owns it, but every other week they're dropping, it's a challenge. ACA is a big challenge down here, I feel like, for a lot of people.
yeah. So it's really the state. The state's going to be the one who's going to dictate that. Brooke said, just to clarify, the children who are DACA recipients, their parents came here illegally. Yes. Their parents came, and some of them, their parents are not even here anymore, but they grew up here. I mean, we're talking we're not talking 7-year-olds. We're talking, these are kids that have lived here their whole life. They go to college here. They have jobs here. Some of them are married and have kids here. So, but it was of no fault of theirs, right? They were little children when they came here. So, that was the decision, was we weren't going to penalize the kids who had no choice in the matter. They came here as infants, toddlers, 2, 3-year-olds, 4-year-olds, stuff like that. So that's who the DACA kids are. So I'm going to pull up some of the changes. The biggest one to me that's going to affect people, millions of people, is the 400% federal poverty level cliff coming back. I don't know if you've noticed, I haven't posted yet because I'm just kind of outraged by this. So everybody, last year, right? $9,400 was the max out of pocket. It went down to $9,200. I'm like, this is awesome. Next year, it's $10,150. Yeah. I'm like, wait, what? There was even talks, I found this out from a carrier, that they wanted to do 10,600. I'm like, are they out of their freaking mind? So I don't know if you guys know this, but the people who have money are baby boomers, and they moved their drug deductible to $2,000. But the individual families with children, $10,150. That's just outrageous. So this year, a family of 2 can make up to $81,760. Next year, it's going to be $84,000. So I did some math, and again, I used AI to explain why I don't think 400 is good. 600 is better. 600, we're talking people in the six figures. But somebody who makes 84,000 is going to get insurance for, we'll just say $300 if they do a bronze plan. They're still going to have $10,000 max out of pocket to deal with. But somebody who makes 90 is going to have 30,000 to deal with because they're not going to qualify for a tax credit. Their rate's going to be around $1,800 or more a month for a bronze plan, plus the 10,000. So a family of two who's only making $6,000 more has to pay 10,000 more for their insurance and their max out of pockets. So that's the kind of argument I'm trying to show, because CMS and the people who are making these decisions do not understand how it works. You have to remember they have very limited knowledge on the real world. That's part of the reasons why it's kind of frustrating, right? Because I'm like, we are not trying to hurt people. As independent agents, we live with our neighbors, man. They will come after me if I did something wrong, right? We are trying to help, but they don't understand how it works. They're just like, yeah, we're going back to 400. So 600 would be doable. I kind of get why they don't want to have an unlimited cliff, because an unlimited whatever means that the insurance carriers can just keep rising the cost and maybe not have to explain why they're rising the cost. 600 is doable, at least for the next couple of years, right? So that's the other argument that I'm really asking, please. If we can get enough people to talk to them some math, and I use that math, I'm like, somebody who's making 84 gets it, somebody who makes 90 doesn't. But now they have $10,000 in expenses on. And this is the other thing that people, again, CMS doesn't realize. If you make 90,000 and you are healthy, and I'm an agent, good, bad, or otherwise, and I say you can go on the marketplace for $1,000 or $1,800 for the two of you, or I can get you an alternative plan for 600, or I can get you an alternative plan for 1,000, 18 or 1,000. What are they going to do? They're going to pick the 1,000. I mean, of course they are. So what's going to happen is everybody who's above the 400 percentile is only going to take the ACA if they're unhealthy, which means the risk pool is bad. This is going to make all the rates go up because anybody over 400 is going to go, I don't need it. So that's the other argument, to make CMS realize the healthier people the rates will be. So, because I mean, I did it. Remember, I've been doing this since the beginning. I remember when there was a cliff at 400 and people were coming in, and I only put the unhealthy person on the marketplace. And I was bending over backwards to find something else for the healthy person. Yes, Darla.
What are they going to do about the people who don't qualify for Medicaid anymore, but don't make enough to qualify for a subsidy at all? The full price.
I think it's just going to keep going the way it has been. They've never had an answer for it. I just ask people, is it possible you can make 15, 16,000? They can't penalize them for making less. Now, I do think what's going to happen, that's one of the things I kind of disagree with what they've got. But I've been telling people for years, I mean, since the beginning, I got people like, I don't want Medicaid for my kids. Okay, I'm not going to force you. So they're on the marketplace and they would have qualified for Medicaid. The system is eventually going to make them go to Medicaid. And they're going to go, no, we're just not going to cover you. But right now it's not. So I don't know. I mean, part of the whole, some of the changes that our administration is doing is the Medicaid rollback. Again, it saves us on taxes on the federal level, but it's going to screw states. And people don't understand that 80% of Medicaid goes to nursing homes. It's not the Affordable Care Act. It's not those people who don't have jobs. It's not necessarily the poor. It's our grandparents and it's our parents. It's nursing homes. And so if they take the money, the Medicaid systems, the Medicaid money that states have now relied on and have done more robust, they're going to take that away. It's going to affect, the states that aren't going to expand Medicaid. I don't see states expanding Medicaid. So if you're in a state that doesn't have it, like Texas and Florida, they're not gonna. There's no way they're gonna. It's gonna, and the states that have expanded, they're gonna have to go, we don't know what we're gonna do. They may have to get rid of the expanded part because they have to support the nursing homes. So some of these changes that they're talking about have really long-term consequences. And so, but when they don't make enough, there is no penalty for not making enough. So I think the reason that even became a focus is from the call center people, and they weren't necessarily even calling. It was the giant agencies who gave their cute, enthusiastic 23-year-olds a clipboard and sent them out to the homeless shelters. And sent them out, to very purposely go after people who they should not have. I read something, that it was stealing, millions of dollars from the government in tax credit. And I'm like, and they were doing it for their $20 commission, but that guy stole millions. Have I said somebody who's going to make 17,000 who might only make 12? Sure, I have. I didn't steal millions. It's because of that. So they're overreacting because of that situation. The individual agent who there's a couple people that may not make enough, I don't think is going to be an issue. But I feel bad for Texas and Florida and the states that do not cover people. My state, it's always been anybody below 100% gets it. Doesn't matter, male, female, kids, adults. So we're not a Medicaid expanded state, but we had a really good Medicaid before that existed. So the states that you're in, do you have somebody who can give you money and give, you can work a part-time job? So yeah, I could probably do that. All right, let's do that. So the the short-term plans will probably come back. I think we're supposed to hear, I'm on a conference call in April with the president of National General, ACA Allstate, and he's going to tell us what's happening. But I don't know why it wouldn't come back, the short terms. The last time we had this administration, it did. I'm assuming it will. So, that's the problem with that 400%. They better have short terms. They need to have something. Every state's different. States still can dictate. My state says 364 days, not 365. So you have to know your state's rules for short term. And then there's other states that you could do 3 months. And then there's some states that were like 3 months, 3 months, that was it for the entire year. And other states let you do 3 years. So you'll still have to know what your state is. There's indemnity plans, and there is some alternative plans out there. There's more alternative plans now than there ever has been. I had a couple people on as guests last year in the fall. If you want to look at some alternatives, check out my YouTube channel. Just look up Coach Chris. I'm not the guy. So there's 2 people called Coach Chris, and one guy has like 4 followers. But there's America's Choice. There's US Health. I have one called Redirect that I really, really like. So there are some alternatives, but that is bad for the ACA. If all that is that's going in the ACA over 400 is sick people, it's going to make the carrier rates go up. They have to have healthy people. So that's the other type. That's the other argument. Not just, hey, $6,000 difference. They have to pay that much more, is crazy. I used my Copilot. And by the way, when you use an AI, you can tell it what you want. I told you what my argument for DACA was. I said, this is what I first wrote. Help me write a compelling argument that cutting the tax credit at the 400 FPL is detrimental to millions of people in 2026, that a compromise to move the limit to 600 FPL would be better. And it gave me a statistic, and I'm like, I'm missing some things. So then I go, also put in that a household of 2 in their 60s would have affordable care at 86, but a similar couple of income of 90 would have to pay about 20,000 in premiums, as well as the new max out of pocket. That's over 10,000 per person. This is not reasonable. That just cause someone makes a few thousand more, they have to pay thousands more, and this will lead to only sick people enrolling that raise the cost across the board. So you can tell it, and then it makes a new thing, and then you can go, all right, make it shorter, make it easier to read, make it 6. So you can edit, don't just copy and paste. And then I always end up editing what's in there, so it sounds like me talking. So there are alternative plans, and some are good alternative plans, some are not. But if we end up putting everybody over 400%, we're talking millions. Over 400, only sick people, it's going to be bad. So, yes, U.S. Health is a captive. I'm just saying there's these alternatives out there. You know, people are gonna be searching, and if you don't have the answer, they're gonna go search it for themselves. And you're gonna get somebody who signs somebody up for United Healthcare $20,000 deductible plan with a max out of pocket of another 20 and tell them it's an HSA plan, and then they come to you and you're like, oh my goodness, this is not what that is. So you need to be the expert. You need to have, here's alternatives, but this is what the downside is. Here's the ACA. This is how it works. So if the federal income cliff comes back at 400 or even at 600, and somebody is over the limit of 4,000 if it's a single person, or over the limit by 8,000 if they're married, the best thing to do is to put them into an HSA plan. Tell them you need to go contribute 4,000 or 8,000 into the bank throughout the year. You can also do a one-time withdrawal from your IRA into an HSA without any penalties. So that will put you under the cliff. So instead of paying $1,800, you guys are going to pay $400. It's worth putting 8,000 away into this taxing. All right, all right. And then then show them the all ancillary products. Because a lot of them are not used to HSAs, right? They're going to go, "Ooh, I have to pay 7,000 out of pocket." Yes, but I'm saving you, $1,400 a month. So put away the 4,800, whatever it is. And now here's an accident. Here's an indemnity plan. Here's the gap insurance with Paylick. Give them. It's like.
Can you show us how to do that, Chris?
Tell them. What was that?
Can you show us how to do that?
Yes, I can do that on a different time. It's also on my YouTube channel.
Okay.
Also in my course, because it's not the goal of telling people ancillary products is not to sell it. The goal is to tell them about it.
Is that one of the things you mentioned in your course that's talking about complicated issues
Absolutely.
with ACA?
Yep.
I was going to talk to you about that course. Okay.
Yep. It's something that's very near and dear to my heart. $10,000 max out of pocket is outrageous. I just read 31 million people borrowed money to pay for medical debt in 2024 alone. And they were between the ages of 18 and 49. There was a few in the older, but the majority, majority of it was from the younger generation. And that's a group that's mostly going to be going to the ER because of accidents. At minimum, you should be telling them about the accident policy. That's cheap. So this is your summer, and I am going to be doing, some courses. I'm going to bring in some, like United and Allstate. They have guaranteed issues, even for the sick people. They have some guaranteed issue products, ones that are not. You've got to learn these. And it doesn't matter. You don't have to be me and learn 32 different accident policies. It's like ridiculous. I don't write most of them. Pick a company. If you like Allstate, just do Allstate. If you like United, do United, because those two are, if you just want one, because they kind of have everything. Then once you got those down, if you want to start looking, you can go, okay, I'm going to look at, this other one. That's fine. You don't have to get contracted with 14 different carriers, and the difference in price and the way those work are pretty minimal. I mean, it's a buck here, it's a buck there, but most people would rather pay one bill as opposed to bill here, bill here, bill here, bill here. So, but a 10,000 out of pocket, you have to tell them about options to protect them from medical debt.
And I believe that if they're 1099, they have the ability to write off deductions and lower their total income, but standard deductions do not count for 1099. So just a heads up on that.
Correct. So they can write that off. I mean, if they're self-employed, they should be writing it off.
Also, too,
Mhm.
back before, the unlimited stuff. So pre-COVID, when the 400% subsidy cliff was still around, I had a family of 5 who they're at the upper end of that 400%, but they we're just under the 400%. So we proceeded getting them an ACA plan, and they love Family 5. They were in a county where it was like a zero premium policy for like making 90,000 a year because of Family 5. They got an end of the year Christmas bonus that pushed them over the 400% at the end of the year. And so this is where we as agents will have to be a little bit of advisors in a capacity where if they are right at the top of that limit, we're like, we can get you this great price plan, good silver plan, whatever, but make sure you do have an IRA set up. Make sure if it's an HSA plan that they actually set up an HSA, because once the year is over, if they find out they don't have enough tax deductions otherwise, that is their last ditch effort after the tax year is over, because they have until April 15th or whenever tax time is, they have until they do their taxes to retroactively apply funds to an IRA to reduce their taxable income to requalify, below that 400% threshold.
And if
If
you
you're
need an
working with-
advisor, I'm an advisor too.
Yes.
Financial
If you're
advisor.
working with self-employed people, they need to have an IRA, just a simple IRA. Now they can do some backdating stuff, but it's like, isn't it worth to put $2,000 in your IRA as opposed to paying back $20,000 in tax credit? Of course it is, right? I learned more about financial advising and accounting because of the cliff than I ever planned on it. So, because I'm like, all right, here's my goal, so I mean, people would come in March. All right, we're thinking of retiring this year. Okay, what's your income? And they're telling me, well, we're going to work from January to June, and here's what my income is. Okay, and then we're going to start collecting Social Security and a pension. And I'm like, and that puts you over by $3,000. Ooh, maybe I should hold off my Social Security by 2 months. Yep. Or wow, I can quit now. I'm not going to work halfway through the year. I started giving more financial advice than I said, okay, but talk to your accountant, talk to your financial advisor. You have to have those people in your pocket. You have to have good financial advisors that you trust and accountants that you trust. And people, I mean, I haven't had to do this in so long, but people will bring you their paycheck and I'm like, all right, bring me your last page stub. And it says their medical expense. I'm putting that there in the deductions. Like I was getting them down to the line, but I'm like, under no circumstances. Now this was in 2026. I remember saying, under no circumstances can you go over $64,597. And if you do, you're going to pay, and I would show them, you're going to pay $1,000, $2,000 a month. So I'm like, so under no circumstances can you go over that. If you think you're going to, call me immediately. If you're not sure, because I had a couple, they were like, well, if we sell the business, we're going to go over. If we don't sell the business, we're not. They're not even close. And I'm like, all right, what can we do? So we split the difference. They paid $1,000 a month so that if they sold the business, they would have to pay another $12,000 because they had a $2,000 tax credit. And I go, and if you don't sell the business, you're going to get all that $1,000 back. That's what worked for them. So you have to be really creative. You have to start thinking out of the box because you want people to be on the marketplace. You really do. It's better coverage. It's guaranteed. It's got all that benefits. There's a cap. There's free, you want them to be on that. The people you can't help is when they make too much for an HSA or they're totally retired. So just so you know, when somebody is 100% retired, they're living off Social Security and pension or Social Security, they are not working. The only deduction is basically student loan interest, which is nothing, and an HSA. It doesn't matter how much they contribute to a nonprofit. They can't put money in a retirement account because they're already retired. So that's why I got to be really, really familiar with HSAs. I don't think I knew anything about them until that year that I had to start really telling people what HSAs were and figure out a simple way to explain it. But it was mostly, you got to put this money away or you're paying this money, right? You're going to pay a lot or put this way and it's your money as opposed to, pay yourself $8,000 instead of the government $20,000. Well, that's a no-brainer. So you're going to have to think out of the box. You're going to have to be a little bit creative, but that's the point. They're coming to you as the expert. They want you to give them advice. They want you to show them the options, not just their health, but ancillary products. That's what they're coming to you for. Because as soon as they find out from Bob Smith down the street that their agent's better, gave them more advice, you're going to lose people. But you're going to get people if everybody's going, hey, because we hear it all the time. Chris was really good because she explained what I needed. I look at my reviews. Sam was awesome. She showed me all my options. Josh was really good at explaining something. Educate your clients, take the time. Those agents that are out there, I saw one, he was like, because some of the new rules, there's no way I'm going to be able to renew my 3,000 people. And I'm like, well, then you weren't doing it right. You were just letting them do it themselves. I don't want them to do it themselves because 99% of the time they mess it up. I'm just telling you, I'd rather work with 900 individuals than 3,000. I'd rather work with 900 educated, well-informed, layered up, and I will make pretty good money because I'm layering it. Again, my end goal is not to sell. My end goal is to educate. People are going to take it. 50% of people will take what you're offering, if not more. So you are doing people a favor so that they don't end up in medical debt. One of the most common things about anybody who's filing bankruptcy is medical debt is part of it across the board. And these are people who have insurance. The 31 million who borrowed had insurance. If you're working with groups, I'm always getting groups. I'm like, you have to offer the ancillary. You have to offer ancillary. And let me educate your employees. Let me tell them the stories of how this is going to affect them in their real life. Most employers are happy with their benefits, but wish there was more education. So you have to protect people from medical debt. Donna asked me if I prefer Allstate or U1 more than Manhattan and Medico. Medico, I'm not as familiar with because that's a Medicare thing, and I don't sell Medicare, but the products seem to be very, very good. I remember selling their dental way back when and not seeing a problem with it. I know they've got some nice products. Physicians Mutual's got nice products. Allstate and United, the nice thing about them is it's one spot to get multiple things. You can get dental and vision and accident, indemnity, whatever you want. I'm not really, those to me are a horse apiece. It kind of depends on the situation. I'm not a big fan of Manhattan Life. I like some of the people there, but I've run into problems. I love their dental vision hearing plan. That one to me is one of the best products out there because it pays year 3, 80% of majors. I mean, I just went to get new glasses. It's going to cost me $500 to get a pair of new glasses with my traditional medical or vision insurance. If I had had Manhattan, they would pay 80%. Like, so I do like their dental vision hearing plan. But I personally have run into issues. Now I know other people have not run into issues with Manhattan Life. So, but it's not so much the product. I always listen to what my clients tell me. If I'm selling a new product, I will tell them, this is a new carrier for me. I like this product. This is what it says it's going to do. It sounds really good. I show them and they're like, it sounds good. And I go, but you need to tell me if it doesn't, because I don't want to sell something that's not going to work. And I've never had somebody go, oh, well, then I don't want to take that because it's new. I've never had it. It's not happened once because I'm being honest. I'm like, this brochure, I'm reading this brochure. I've done some due diligence. I've read reviews. I've talked to the client or the agent services, and I think it's going to be a good fit. I mean, this brochure says this is what it's going to do for you, and that's a good fit. And they go, okay. And I go, but let me know. If it's not working, you got to let me know because I don't want to sell you something that doesn't work. And there have been some that I don't sell anymore because they just don't work. So I like Philadelphia American Life, but they don't have everything. I love their gap policy. And it's not the same in every state. So, if you've got some carriers you're already working with, look at what there is. Take the time. It's worth it to go every Monday from noon to 1. I'm going to deep dive into a brochure from whatever carrier and start learning that because you have this summer. Because by this fall, you better be an expert. Because if you're not, they're going to go somewhere else, or you're going to end up leaving them to major medical debt. So, yeah, Joseph, if they need to open an IRA, you'll help them. I will tell you, those of you who are looking to find better connections, I just hosted a class last night at the Union Hall in my area. Don't let insurance stop you from retiring, which I think I've told other people about it. I even sent the slides. This one was a big one. We had 88 people show up. And I'm telling them about the income cliff, which is what I did way back when. And I'm telling them, if you're thinking of retiring in the next 2 years, here's the cliff. Here's the cliff, right? And then telling them, talk to your financial advisor. Talk to your account.
Also, your book is worth some money, so you could sell your book too if you're planning on retiring. So there might be people even
Oh,
on
not agents.
call.
I'm not talking about
Oh.
agents. I
Oh, I
put
got
that
you.
out for the consumers
Oh,
who
okay.
want to leave the factory. That's
I
what it
got you.
is. Don't let
Okay.
insurance stop you from retiring. It's that you put that class out, I'm telling you, people will show up. And we did marketing, we did radio, newspaper. We sent out letters that we wrote to each HR department in the area with some flyers saying, hey, put this in your break room. I sent it to every financial advisor within a 30-mile radius, telling them, hey, this class is available for you and or your clients, or I would be happy to teach your clients this, right? You reach out to financial advisors in your area and let them know, say, I just want to make sure you're aware that the income cliff is coming back. And if they go, oh no, the income cliff, they know what that means. If they go income cliff, you're like, oh, I need to tell you what this means. Because it's a big deal. So we'll know by April, May at the latest, is it going to be 400 or not? So you've got
Also, a lot of financial advisors don't want to deal with health insurance, so they're good referral partners too.
they're great
Anyone that's
referral partners.
interested.
Yep.
Oh yeah.
Yep. When somebody needs one, I give them 3 cards. I'm not committed to one because we have about 8 that send us people. And so, they are great This is your chance to meet out with them. I'm coming here to tell you about the income cliff. I want to make sure your clients are covered. And if they go, what? You can go, okay, here's what this means. And, is there anyone that's been here 2016 or later? And if they're like, no, can I do a lunch and learn? I will bring you Subways and tell you what's happening. And they're going to go, all right, this is our person. And then all of a sudden you start getting clients from them. And I mean, there's Merceburgers is a financial advisor in the area that we've been working with for a long time. And they understood, I met with them every year. Here's what the cliff is. Here's the dollar amount, because they didn't necessarily know where to find that. And I started getting people that said, Josh Merceburger said I'd be good. And they hand me a piece of paper that had what their income was. And I'm like, hey, if Josh knows, if he's telling you you're good, you're good. And I didn't have to worry about it, So it's a brilliant way to meet people for good networking and also get goodwill out there, protecting your consumers.
Hey, Chris,
Yes.
would you by chance be able to share maybe the content or slides of that presentation that we don't have to completely reinvent the wheel? Maybe.
If I'll put my email in the chat. If you want to email me, I will forward it to you. And then yes, please make it. I used it stats in my area. I don't have to remove, my logo on there.
I would like it too,
Thanks.
Chris.
So-
I'll email you.
The email is the best way to reach me, just so you know. Phone sits silently over there, upside down, and then when I go home, I ignore my phone. So, the statistic. Somebody asked me to say the statistic: 31 million people borrowed money last year in 2024, and I will even give you the website and the article from The Hill about it. I mean, it's just horrifying to me. When I read that, I'm just like, 31 million people. That's crazy.
I think about making payments. I mean, I'm in that situation now for myself because I used my insurance last year. I don't typically use it, but I did. And I'm making payments to either the credit card or not the credit, the whatever it's called, the, bureau or the hospital itself. The collections, I
I'm
have
on a
to
payment
pay,
plan.
you
from
know,
a thing that
so
was years
how
ago.
many people are going to be doing that? And when are the hospitals going to start going, hey, everybody's making payments. They're not even able to pay their bills.
Nope. And this survey isn't even talking about those, right? It's not even talking about the people who are on a payment plan. It definitely is statistically Blacks and Hispanic Americans were more significantly impacted by it. And of course they were. They're negatively impacted by a lot of things. But if you live in an area that's near that, it's a gold mine to help. So it's kind of crazy to me. Joseph, you were told U-Haul and they're bringing back the tribe terms. Again, it depends on your state. And it'll probably be, my guess is just because of the way things move, it may go into effect before the end of this year, but by 2026 for sure. See, I'm going to go through here. What happens if someone has ACA and then opens an HSA? Well, it doesn't matter. So you have to be enrolled in a qualified plan. So that's the biggest thing. And I will tell you, accountants don't know what they're talking about. There's even financial advisors who are like, oh, what was your deductible? 7,000 must have been a high deductible. Go put it in there. And it's like, wasn't a qualified high deductible health plan. It is an honor system. The IRS does not ask for proof that you were enrolled in a qualified health plan and that you're spending your money on qualified health things until they do ask, until you get audited. So it's you as the agent. You have to tell them, I'm going to put you in a high deductible health plan. Here's what it says. Here's what it means. Now, I don't know how many of you are like me. We've got, most of our carriers have a $0 bronze plan, a $0 deductible plan. Sorry, not zero, a $0 deductible plan. And I think it's funny every time somebody go, my accountant wants to know if I'm in a high deductible plan. I'm like, your deductible is zero. You have no, it's not a high deductible plan. But they're looking at that max out of pocket. They're like, oh, well, my max is 92. Yeah, but that's not a high deductible health plan. So you have to help them. So if they are enrolled, as Brandon said, if they have it ahead of time, but even let's say they don't, I had somebody who became my client who was enrolled in a high deductible health plan. She had no idea. She didn't even know she was enrolled in an HSA. It was just the cheapest plan. She just wanted the cheapest plan. So that's what she was enrolled in. And she was over the income cliff by about 3,000, her and her husband. And I went, so I don't even know how I found out she was in an HSA. I'm like, you're in an HSA. You need to find $3,000 to put it in. You have from January 1st until you file taxes or April 15th to put money into an HSA for the previous year. Same with an IRA. Now you have to tell the bank, I'm putting this money in for 2024. You know, you can't just plop it in because then they'll assume it's for 25. So you can do it anytime in the year or at the end of the year. I mean, if somebody's like, well, I don't really know, I may go over, I may not, I don't know if I have money to put that in, and all right, well, here's your HSA, you know, they can do it all at once. So I have HSAs in my class. I talk about HSAs in my YouTube video. We can do that a little bit more. So
here's the question. So this is all unsustainable. We're almost at that cliff. What can the consumers or what can we educate our clients to do to start complaining about this? Who can they voice?
Right now, this is it. If you can send a mass email, people, please, this is what's happening, especially to people that are over the cliff. You know, what we are going to do, I don't know how you guys have tracked it, but we do have a spot on our CRM that we put in the income. And we're going to look, and anybody who's at 300% or more, we're reaching out. You need to tell CMS. You need to say something.
So where do they go?
That same link that I put in the thing. So it's at the very top. I'll put it again in case, because I think some people missed it. It's an open comment, public people, anybody can put it in there and say, this is not sustainable. It's going to be bad. That 400% is just bad. When the marketplace first started, I didn't have anybody who didn't qualify for tax credit at 400 because the rate wasn't, it was cheap. It wasn't, a little history for those of you who haven't been around. The reason the rates jumped stupidly and the reason the 400 became an issue was in 2016, President Trump made an executive decision in the middle of the year and told the insurance companies, I'm no longer paying you the money for expensive people. So part of the Affordable Care Act was the no cap, right? No more $1 million cap, we're not covering you. Insurance companies have to pay for everybody. But the insurance companies are like, but we'll go broke. I mean, there are people that are multi-million-dollar claims. We can't sustain that. So part of the Affordable Care Act said, well, we will help pay for those people. Just the expensive people. Okay, so they opened it up, and Trump came in, and it was not, there was no planning. He just said, as of this date, right now, we are no longer doing that. Well, the insurance companies no longer had money to help pay for those multi-million-dollar people. And part of it's because people are living with cancer longer, and part of it is medications. Holy crap, it's medications. It's way more than the actual medical stuff. It's medications. If you've seen some of them, they're like $3,000 or $4,000 a month, and the insurance is kicking in. After month 2, they've already reached their max out of pocket. So when that happened, the rates jumped 60% because they had to keep their doors open. It didn't matter how many super sick people they had to have their doors open. That's what caused the massive rate increase, was that. So he was trying to save money, but in reality, we ended up spending millions more in tax credit because everybody got a bigger tax credit. So, and that's never been changed. They've never gone back to say, we will help you with just the high-end claim people. So the rates came down a little bit. In my area, it was $2,100 for a couple in their 60s. That was their tax credit in 26 and 27. And now it's not. Now it's about 17. So it came down, but it's gone back up. So that's partly where that is coming from. Well, now they got rid of that cliff. So millions and millions and millions and millions of people are on the marketplace. And now they're going to get kicked off. So you're right, Chris. It's not sustainable. They have to do it. So take that link, send it to your people. If only 20% of your clients open it and make a comment, hey, that's great. That's 20% more. They need to hear from consumers, not just us. I know carriers are making their comments and agents are making their comments, but you're right. Consumers they need to hear from people, not just us, because they think we're just money grubbing agents, which is, we're so money grubby for our $20. We're almost done. I'm just looking to see if there's anything. I'm planning on teaching HME and HIB plans. Yeah, I'm going to do a class on just here's alternative options, what they work, how they work, and how to leverage them in your conversation. Every insurance policy has a giant gap, except maybe supplements. Medicare. It's like the only one that doesn't have a giant gap, but you're paying for it, right? Every plan has a giant gap. On the marketplace, on the $0 deductible plans, the ER gap, ER copay is usually a giant one. It's $1,500 for an ER visit. Here's an accident policy for 20, right? So you have to show them where the gaps are. If you talk about how amazing this plan is and blah, 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 and you'll never reach your max out of pocket, well, they may reach their max out of pocket, but you just sold them that it was so amazing they don't need anything else. You need to be honest and show them where those gaps are. Say, here's the plug for that gap. And then they can say, yes, I want it. So I will be doing that as well. And I do have it in the classes. I'm on the ACA Academy class. Don't let insurance stop you from retiring. That class is, you can make up your own thing, but don't let insurance stop you. And it's great because people will come 2 or 3 years in advance. And that's actually who you want. The people that are 2 or 3 years, because then they can talk to their financial advisor. Then they can get their money ready so that they're living off a Roth IRA. In fact, one of the people came up to me after the class and said, so we should be stacking our Roth. And I'm like, absolutely, because that's not income. So they're like, all right, because they're going to retire in 2 years. So I have not, the med billing specialist and claims specialist, I haven't connected. I probably could, but 90% of claims is done by a computer. So really, I'm going to have a class for my people on how to read an EOB. You need to let them know how to read an explanation of benefits. And the bottom says, if you don't agree with this, here's how you appeal. Then a person looks at it. So all of these claim denials that are happening, 90% of the time, a person never even looked at it. It was just the computer system that opted it out for whatever reason. So, educate your clients.
Okay, that's a big thing. I think that's important. Seems like there's a lot of excess billing, or, I mean, my son went to CVS for a strep test and got a $700 bill. It's nuts.
Right. You got to educate them on what a free preventative means. When you do this, it's no longer free. Oh, you talked about your mental health. You cannot talk about your mental health. It's no longer free. So do quick little videos, do classes. we are going to do a class for everybody 300% above the federal poverty level. And we're going to tell them we're going to start telling them now so that when open enrollment happens, they're prepared. You have to have your income below here. We're going to start, we're going to, a giant postcard. It's going to be worth the money for us. Postcards, text messages, however you need to get out there, knock on their doors. You have to come to this class because the federal cliff is coming back and it's going to affect you. And it could affect you by thousands of dollars. The people who are at 500% above are kind of SOL. If they're healthy, great. Here's some alternatives. If they're not, you have to go in the marketplace. But there is some options out there. Yeah, if you search federal poverty level 2026, you will find it. It is there. Somebody put a Google thing. So they are out, so you can start telling people. I don't know. Most of these changes will go in effect in 2026. The one I could see happening right away is the SEP documents and also getting rid of the 150 percentile open enrollment, which I am 100% for. I think they need to get rid of that. That's what caused 99% of the fraud. If they just got rid of that, instead of trying to say we have to prove that somebody's making low income, like just get rid of that. Right now, people are lying. I'm making 20,000, and then 3 weeks later, go back in there and say they're making 80. Right? So if they got rid of that cliff or that open enrollment, I think that one is actually going to come into effect right away. So this is recorded. It'll be on the YouTube channel. We will know more in April, maybe May, from CMS. We've got 15 days left to get those comments out there. Please comment, make intelligent comments with, good arguments on why what they're trying to propose is either a bad thing or it is a good thing. Like I'm going to tell them the 150% OEP is a good thing to get rid of, and here's why. It opened the door for lots of fraud and would eliminate a lot of the other things they're trying to fix. If they just got rid of that, they wouldn't have to do that other stuff. So, all right, my classes are on the YouTube. Just look up Coach Chris and YouTube, you'll find me. And if you want my slideshow, send me an email. I'm really bad about remembering to email. So if you email me, I'll just quickly send it to you and I will let you know when the next meeting is. It is April, but I have some traveling and speaking engagements happening in April. So I got to figure out when I'm going to be. But thank you very much for everybody for coming on. And there'll be more. We just need to see what the rules are going to be, and then we'll break them down because believe me, it's still a doable industry. Do not think it's going away. You can still make really good money and have a really good living. All right. Thank you very much, everyone.
Thank you,
For the
Chris.
rest of your week. Thanks. And check me out if you're a Medicarians or the ACA Summit. Please come say hi.
Thank you.
Thanks, everyone.